Welcome to the latest Motley Fool scoreboard. I'm on in Chockable, and we've got longtime fools Matt Frankel and Rick Menares giving a 1 to 10 rating to a top 100 stock in the primary Hidden Gems database. It's Broadcom, ticker symbol AVGO. We'll rate the strength of Broadcom's business first, including factors like industry, competition. 10 is invincible. A 1 is hopeless. Rick's at a 7. Matt, you're at an 8.
Yeah, Broadcom's a pretty incredible business that's kind of changed in a lot of ways over the past, say, like 5 years. I remember when Broadcom was kind of considered like the value stock of the tech world. Now it's definitely gotten back into growth mode. It's got a massive product portfolio, which it's had for years and years. Tremendous implications if the AI boom takes off, we'll talk about the revenue growth and stuff like that shortly. Revenue has doubled over the past 3 years, that would have seemed kind of excessive a few years ago when it was kind of in value territory. But now it's in full-on growth mode, and now it's, as we talked about before the show, it's kind of getting to be like NVIDIA Part 2.
The sequel. So Broadcom makes more connections than a traveling salesman. It claims that more than 99% of internet traffic crosses through some type of Broadcom technology. A few years ago, Broadcom was largely known for its chunky dividend yield, as we all reflect back like Matt did 5 years ago when the stock was cheap. The stock is an 8-bagger over those past 5 years. The dividend is still there, but it's a lot smaller now that Broadcom is a growth stock.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 9s, Matt.
Yeah, so for me, especially with a long-tenured CEO like Hock Tan who's been in charge since 2006, so about almost 20 years now, it's all about show me the money. What have you done for investors over that long tenure? And even backing out that 8-bagger over the past 5 years that Rick talked about, it's been pretty incredible. Broadcom has delivered a 28,750% total return since he took over as CEO. So even while we were in value stock territory, this was a pretty strong returner year after year after year. And he has a very deep bench around him, as you would expect with a $1.7 trillion company. So really impressive management team. No dings from me.
Yeah, so Hock Tan isn't just a great name for a pawn shop specializing in suntanning beds. He is arguably one of the most successful tech CEOs that people aren't really talking about. He'll turn 20 years as CEO in March. There are only 7 companies with a greater market cap than Broadcom, the Mag 7. Can you please sign my Change.org petition to have Broadcom added to the newly christened Mag 8, please?
Yeah, at some point, if you're close to the biggest company in the world, you gotta get in on all the clubs, right? For financials, a 10 is a fortress, a 1 is yikes. Rick's at an 8. Matt, you're at a 9.
Well, first of all, I think Mag 9 has a better feel, and we put Berkshire in there too because it's a $1 trillion business. But speaking of that, I gave it a 9 because Broadcom has a strong balance sheet. They have about $16 billion of cash. They have $65 billion in debt, which sounds like a lot. But this is a $1.7 trillion company. That's totally a reasonable debt load, especially when you consider revenue has doubled since 2022. The revenue growth has accelerated recently because of the AI surge. A 68% gross margin over the past 4 quarters. This is a cash machine business. So financially, there's not much to not like here.
Yeah, so momentum is on Broadcom's side. In its last 2 fiscal years of revenue growth are its 2 strongest jumps in the past 8 years, II. These are high-margin companies. There are high-margin companies, and then there's Broadcom. Net margin is clocked in at 34% or better in 3 of the past 4 fiscal years. This is a very strong business.
All right, Rick, let's move on to valuation. How well will Broadcom stock do over the next 5 years, and how safe is it? 10's a sure thing. 1 is a lottery ticket.
Yeah, so I went 5% to 10% with a safety score of 7. So $1.6 trillion market cap for a company with less than $64 billion in revenue isn't for the squeamish. Even when you consider Broadcom's beefy margins, and that means that 36% of its trailing revenue made its way to the bottom line over the past year, it's still a bit steep. For safety, I went with a 7. I could have gone higher, but there's a lot of long-term debt on the books.
Yeah, we're going to flip it here, and I'm going to be the pessimist with Broadcom. I went 0 to 5% returns over the next 5 years with a safety score of 6. And, I mean, to say that Broadcom's valuation stretched would be a bit of an understatement. Just to do the math with the stats Rick just told you, it's trading for 25 times sales. That would make sense to me if Broadcom were expected to grow at like 30, 40, 50% annually over the next 5 years. But I don't see that happening. It's not doing that now, even with the AI boom in full swing. And if that AI boom loses steam, this could be a negative performer over the next 5 years. Like I said, even through no fault of management. It's a great business, but it's got a lot priced in.
Thank you to both Matt and to Rick. They're giving Broadcom an overall score of 7.2 out of 10. For top hits, Rick doesn't have one, but Matt prefers AMD. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Clear Secure. Till then, Fool on.